Good afternoon, and thank you for joining us here with the delightful mortgage brokers at OMB, our mortgage broker. We're joined by Dipesh in the top right, Mitesh bottom left, and Kirti on the bottom right. Hi, how are you guys?
Good.
Very well.
Thanks, Akhil.
Yeah, nice to see you guys again. And bearing in mind, yesterday was the finale and the end of the tunnel for the stamp duty incentive buyers. You guys are still smiling, but yesterday was quite eventful, wasn't it?
Yes,
Yeah.
definitely eventful.
But listen, the main thing is we grinded, we worked around the clock, and we actually worked very, very well with all our professional partners, you're right? So surveyors, conveyancers, estate agents. So we all worked as a collective and got the deal over the line for all our clients. So, you know, well done to you three in particular. And I chipped in with a few golden nuggets as well. So that's always nice to see as well. I'm not always on the golf course. All right, good. So, ladies and gents, thank you for joining us on Facebook and on YouTube. We are going to be doing these videos monthly, if not weekly, depending on how our diaries suit going forward. But what we want to do is put together a short Q&A each time that you join us on live Facebook and YouTube. Please do follow us on social media, on all our Facebook and Instagram channels. I'll leave the comments below somewhere where you can join us all and connect with us. We do put posts out virtually every day of the week relating to property, mortgage finances, updates, market trends, just things that we're hearing and questions that we're getting from our clients and in particular banks and lenders. So we want to share that information out to you guys so we can help you going forward in your journey on getting onto the property ladder or growing your portfolio as well. So thank you for joining us here on Facebook and YouTube. We're going to kick off and hand over to the host with the mic, Dipesh, in the top right, who's going to ask us questions that we're getting constantly. You know, it's a trending topic, buy-to-let and bridging loans. So we've put together a few top questions around bridging and buy-to-let. So Dipesh is going to ask the likes of myself, Mitesh, and Kirti, and also drop in with some comments as well from his end. So Dipesh, over to you.
Good. Thanks, Akhil. Hi, guys. So yeah, we've had compiled a few questions from the clients over the last couple of weeks. So we just asked them to you guys and get some answers for our clients. So we're going to kick off. Akhil, can I purchase a buy-to-let in a limited company name as a first-time landlord?
So yes, you can. But what we want to know a bit more about is your background. So what's your story? So a lot of clients pick up the phone, email us and call us to discuss their buy-to-let journey. How can they get onto the property ladder, especially being a buy-to-let landlord, first-time landlord. So we as independent brokers want to be impartial. So we'll always provide our clients with a buy-to-let quote in their personal name as well as in the limited company, because we think it's right that the client understands both sets of fees, both sets of terms, both in personal and a limited company name. So being a first-time landlord, yes, you can in a limited company. It's not necessity that you need to be a home owner occupier. So for those of you that live with parents and trying to keep the costs low, you can get onto the buy-to-let ladder in a limited company as long as there are certain criteria met. And that might be income, that might be credit score, and things related to around that sort of that piece. So yes, you can become a first-time landlord in a limited company, but what we need to do is have that frank and open conversation with you, understand where you want to be, and we'll have some generic questions relating to that journey. And then what we'll do is we'll map out that journey. If it's not suitable today, or if it is, we'll map out that journey and provide you with the next sets of steps, if you like.
Yeah, good. Perfect. Thanks for clarifying that. So leading on from there, talking about the limited company, Mitesh, is what are the average interest rates in a limited company and what are the usual fees involved?
So I would say generally most clients would prefer a 5-year fixed rates, especially the clients that I'm working with, purely because of the fact that in a limited company structure, when you look at affordability and the stress test based on the rental calculation that the client can get on the property, the lenders seem to lend more when a client chooses a 5-year fixed rate product because of their stress test calculation. But in terms of the rates itself, I would say the rates vary from anywhere from, let's say, 2.75, as low as that, all the way up to potentially 3.75, I would say, depending on the type of property you're looking to buy. And typically, the rates that are under 3% tend to be more for a 2-year fixed rate period, and rates above 3% tend to be more for a 5-year fixed rate period. With regards to the rates, you also have some deals with certain lenders where they could provide you a cashback on completion, which would help towards your solicitor's costs. And some lenders also provide a free valuation as well. So I would say, especially in the last 4 weeks, the rates have been very competitive amongst most lenders. And right now, I think is probably the right time to try and secure a deal, because there are a few benefits like free valuations and cashbacks, where quite a few lenders have started introducing those deals alongside the normal standard deals. And so it just becomes a bit more cost effective to start a process now, especially if you've got a deal expiring less in the next 3 to 6 months, or if you're looking to buy something quite soon. So in terms of the fee structure, I would say they sometimes range from a flat fee of, let's say, 2495 typically, let's say, or they could turn and say, we'll charge you a 1% fee, which can be added to the loan. So it could be anything from 1 to 2% typically. And most lenders would allow you to add those product fees to the loan. Apart from that, you just have to be a bit careful. Some lenders do charge you an upfront application fee that could be anything from 150 to, let's say, £300, and that tends to be non-refundable. So we do our due diligence at the outset and make sure that we're approaching the right lender, because some lenders do charge that upfront application or admin fee, as I'll call it, especially whilst they're providing such attractive rates.
Yeah, perfect. Just to add on to that, I think on interest rates, not always about the lowest rate is cheapest. So also the lower the interest rate, the higher the fees are going to be.
That's right.
So just be aware of that as well. And limited company rates are always a lot more than personal names. So another thing that people should look into. So following on from that, Kirti,
Dipesh, can I add one more thing?
Sure.
It's great, Mitesh, you've raised some great points, and Dipesh like as well. And the other thing I wanted to mention is, a lot of lenders are always competing in the same market for your business, for those investors, especially the buy-to-let rates. So, if one offers 3.19, the next one will come in at 3.15. So what happens is mortgage brokers like us, and probably the like outside as well, you'll have a mass applications going into that same lender. So what happens is they get so bombarded with new applications because they've got the great rates, which makes sense. But we always ask our clients, is it time critical? Do you need to complete by a certain time? And especially around the stamp duty, everyone will need you to complete by the 30th or before of June, right? So it's key that we understand when we need to complete by. The last thing we want to do is, yes, we'll provide them with a fantastic rate, but if we can't complete on time, then it's, the rate did not matter whatsoever. So, that's what we do as independent brokers. That's where experience really plays a massive part. And the beauty is, as independent brokers with a wide range of lenders that we can attract and go to, we will compete with the best rates, but as well as meeting your objectives and your goals as well. So, everyone wants the cheapest rate, who doesn't? But you just got to be mindful, if you've got a deadline to meet, make sure that lender will deliver. And the beauty is, with mortgage brokers like us, we've got access to the systems which gives us the SLA, so standard level of agreement, when they're going to pick up an application, when will the underwriting take place, how long is it from valuation to offer, and so on and so on. So we've got to map it out, guys. Property is a lovely place to be in terms of investments and giving advice. And trust me, we get so happy when we complete on every single deal, because for us, it's a nice feeling, especially for those first timers that are looking to buy property. So we want to help you guys, but you've got to help yourselves. So the key here is work with us. We might ask you loads and loads of questions or loads and loads of documents. It's not because we're nosy, don't get me wrong. It's because we're doing our job and we know what the lender requires, right? Thanks.
Yeah, perfect. Thanks for that, guys. So, leading on from that, Gertie, would you suggest a limited company mortgage or a personal name for a buy-to-let?
Good question, Dipesh. So it's a difficult one. So, as a mortgage broker, we will not suggest which mortgage to proceed with. So, what we will do, as I said before, we will provide you with the option. So, we will provide you with two codes, one on personal name and one on limited company name. Definitely, limited company mortgages are more tax efficient, and as they shared, like the rates of limited company mortgages are a bit higher. But I think the best way to proceed will be to speak to a property tax accountant, get their advice to see what is best for you. Because for one client, like it might be that the limited company mortgage is better for them, whereas for other, getting a mortgage on personal name. But we are unable to provide you with any tax advice. So it's better to speak to a tax accountant. We have many who we are working with. So if you need like any help or any guidance, then we can provide you with the details of the tax accountant. So they will be the one person who can give you the best advice. But we as a broker can give you both the option, and we can work with you on both options.
Yeah, that's great. Kirsty, I'm not sure. I'm getting feedback on your side.
Yeah.
Just double check if are you opened up on both lines? Are you on the laptop and phone or?
Oh no, I'm just on laptop.
Ah, right. Okay. There was a bit of feedback, but that's fine. Just see if you can figure something out.
Okay, thank you.
Yeah.
Perfect. Thank you. That's good point, Kurt. You raised such a pivotal point. There are 40 odd buy-to-let lenders in the market, of which 20 or so offer limited company mortgages. Now, there's a lot of talk at the moment. You should buy in a limited company because you can do A, B, and C, but not necessarily A, B, C fits for everyone. So, as Kurti quite correctly said, you need to get the relevant advice, and in particular from a property specialist tax accountant. They're going to be your key driver in determining whether you should buy a property in the company name or a personal name. So, we're not here to give you tax advice, but what we will do is provide you with two sets of information in a personal name capacity and a limited company for you to make your own mind up. Dipesh, and Mitesh, anything to add there?
No, that's definitely right. I would say that it's always important, even if you have to pay an accountant, to try and get advice upfront, and maybe even sort of get him to prepare a spreadsheet for you to understand sort of how your tax situation will be like over the next 5 years, so that you can understand that if you're a high rate taxpayer, then what are the consequences in terms of paying tax for the next 5 years if I were to sort of incorporate and set up a limited company versus having a mortgage on the personal name, and maybe pay for that service. Get a spreadsheet in front of you, look at the numbers, and weigh it out. And that's what I would do. In that circumstance.
Yeah.
Perfect.
Yes.
Good. So that kind of covers our limited companies section for today. We're going to move on to a bit of bridging loans. So, Akhil, what is it? What is a bridging loan, and what are the fees involved?
Okay, so bridging has historically been a sort of a no-go area, very expensive. Keep away from those sort of loans. They're like sharks and so on and so on. But as the market is ever evolving and the types of transactions and types of properties that people want to buy and invest in, not necessarily you can get a mortgage on day one to acquire that property. And that's where bridging is now playing a pivotal part in this whole business that we're in, into property financing. So to give you a small example, a bridging loan is exactly as it says in the tin. It's there to bridge the gap until you can either acquire a regular traditional term facility, also known as a mortgage, or it allows you to acquire a property, add value to the property, and then sell the property if you choose to, or retain it onto a buy-to-let mortgage or or your own home, so a main residential mortgage. So the uses for it are similar to, as I said, it's there for speed. So if you're buying a property from auction, typically it's 28 days or 56 days to purchase. It's very unlikely to get a mortgage approved within that timescale. And as mortgage brokers, we can't guarantee speed and time. But what we can do with the support from our bridging lenders out there in the market is give them that deadline. Joe Blogs has purchased the property, they need to complete in 56 days. Can you do so? And that's what you're paying for. You're paying for speed. You're paying for an underwriter and a conveyancer just to focus on your transaction, because they know the date it needs to complete by, the lender's expectations in terms of legal formalities and underwriting and so on. So that's what you're paying for. In terms of other uses, as I said, auction properties that are dilapidated, not habitable or mortgageable, they're just some examples of when a bridging loan can be of use. Now, you know, as little as sort of 7 or 8 years ago, I would say keep away from bridging loans because they're very expensive. But the more I get involved in this business and the more transactions we do in that capacity, I actually think it's a pivotal part and it needs to be a tool that we all need to have in our back pocket, especially if we are buy-to-let investors, traders of buy-to-let property and so on. So rates have come down dramatically. They're very, very close to traditional mortgage rates. The cheapest rate on the market, don't hold me to it because they change weekly, if not daily, is around 0.5% per month. Now, there's a lot of attractive rates out there, fancy headlines, 0.5% per month, but there's a lot of red tape around that as well. And it is very much dependent on location, type of property, size of loan, the exit strategy, the credit profile of the applicant, and also the income of the property as well as the applicant as well. So there's lots of questions that we'll ask. So what we do is as soon as we have an inquiry, we'll send you an email with some questions to instantly ask. The beauty about bridging loans is once we've acquired that information over one email, we'll be able to provide you with heads of terms virtually simultaneously within an hour or two. So it's very, very swift, and that's what those bridging loans are there to serve. So as I said, rates start from about 0.5% a month. You can expect to pay about a 2% arrangement fee, and that's 2% of the gross amount. And usually they'll end up to 75% of the purchase price. So if you want to just take anything away from the bridging side of this, it's up to 75% loan to value of the purchase price or the valuation, whichever the lower is. It's then 2% of that loan to value amount for the arrangement fee. Then you'll have a valuation fee, which is dependent on the type of property and the purchase price. And then you've also got the legal fees that you have to pay, and you'll have to pay both your legal fees as well as the lenders as well. So it is double bubble, but it does serve its purpose.
Yeah, no, good. Thanks for that, Akil. So just to add on to that, so bridging loan, also known for a lot of people out there, is short-term finance, auction finance, bridging loan, all the same sort of thing. So if you're trying to know what the difference was, it's pretty much the same thing.
Yeah.
So leading on to that, Mitesh, do you offer bridge to let products, and what's the difference between the bridge to let and the bridging loan?
So that's an interesting one because it's another term that's used within the bridging world, known as bridge to let. So typically, if you think about it, when it's saying a bridge to let, what it's saying is that you're looking to buy a property, do some refurbishments, and then you're looking to let the property out. So generally speaking, you'd apply for a bridge to let when you can't get a traditional buy-to-let mortgage at the outset.
Yeah.
So you approached me and said, look, I'm trying to buy something, but it's not habitable. We need to do some works in the property, maybe a new kitchen, a new bathroom, electric works. I might need to do an extension. So I can't get somebody to come and rent the property out straight away. So I need a short-term finance, that's a bridge finance, but I'm looking to let the property out. Again, typically people would use this product just for, let's say, 3 to 6 months, to do some light works on it, because obviously bridge finance can be a bit expensive. So you've heard from Akil that there's arrangement fees involved, interest is rolled up into the equity of the property, and so clients would want to try and make sure that they try and exit quite quickly. Now, what generally tends to happen, we would obviously try and look to find the right type of buy-to-let lender for the exit strategy. And so at the time of the inquiry, what we would do is understand what the client's looking to do. So the bridge finance lender would understand what the client's looking to do, how much value they're going to add to the property, what the final value will be like. And then at the same time, we will provide an idea of rates and terms for the client for the exit strategy as well, in terms of a traditional buy-to-let mortgage. So the client has a full picture in terms of what happens at the point of exit as well. So typically this is where realistically it's just purely for refurbishment purposes that mainly clients would look to get this particular product, and that's what we call a bridge to let.
Yeah, perfect. Thanks for that explanation. I think that answers that quite
And
clearly.
also to add here, like especially for auction purchase, it's
Mm.
very like important for auction purchase, because normally clients buy a property in auction purchase which require lots of work, and after that they can let it out.
That's
So
right.
yeah, so it's very important for that also.
And
Yeah.
just to add to that, just for those investors out there, the beauty about a bridge to let product is you're certain of the exit strategy from day one. So when the valuer comes out to see the site, they're going to do a valuation on the state of the property as it looks today, as well as looking at your schedule of works and then providing you with the valuation for tomorrow. So the the bridging lender that offers that bridge to let product is actually going to produce two mortgage offers for you. So one for the bridging loan and then one for the buy to let. So it's that mindset and that comfort that you've got two mortgage offers as long as you do what you said you're going to do on day one. So it's a nice position to be in, especially when you know exactly what you're going to do to that property, how much it's going to let for, and then you can then move that on to a buy to let product. And you do save fees. It's one set of valuation fees, one set of legal fees for both sides. And the beauty is, as I said, you come away with two mortgage offers on the date of acquiring the property, rather than having somebody coming out and double checking the work and then thinking about should we provide you with a buy to let offer or not. So it's nice from that perspective. So again, as Mitesh said, it serves well, those bridge to let products. But what we also do is, like we always do, is understand what the end goal is. If you're not looking to retain that property in your portfolio, and the idea is to flip that property, i.e., sell that property, then a bridge to let will not be the right product. It would just be a bridging loan
Yeah.
for that sole purpose. So again, as mortgage brokers, we work for our clients. We don't work for the lender. That's first and foremost. So as I said on the beginning of this call, it's key that we understand the end goals. It's key that we work together and keep that communication channel wide open. Thanks.
Yeah, thanks for that, so we're going to finish off, Curtis. Why should we use a broker?
Why are you laughing? You're a broker, aren't you?
So why to use a broker? Yeah, definitely it's we have to do something to earn our livelihood. So yeah, definitely if you use us, that's good for us. But yeah, to why we should use a broker, there are a couple of things. So one is we have more access to like lenders. So there are more lenders we have access to. There are many lenders who don't directly go to the consumer, so they only go through brokers, and we have preferential rates available for us. So that is couple of the reason. I would say as a broker, it's not that we just jump onto the product and we say, okay, have this. We understand you. We work with you. We work with your time. So if you are working 9 to 5 and you need somebody to talk to you after your work or do your mortgage after your working hours, we can work with you. We can do like evening for you. We can do like before you start your work. Also, as a broker, we understand each lender. So each lender has their own criteria. So sometimes maybe the rate for that lender might be the cheapest, but that might not be the best for you. So we will find a lender who is best for you and whom we think is able to meet your need. Also, there are many cases which are, of complex in nature. Maybe, you have income from many sources, or it's complex income which is difficult for a normal person to calculate it, or even with portfolio landlord, you might have 10, 15 properties and you don't know how to deal with everything. So we help you in everything. We work for you. We make sure that we get and arrange the mortgage for you, and you can just focus on your work and you can leave all the stress on us. So I think there are many reasons why you should go with a broker. Definitely.
Dipesh, what would you say? Why should you use a mortgage broker? Let's reverse.
So, like we always say, we work for you, not the lender. So we go to the bank works for the bank, and they're going to try and sell you the bank's product. Whereas we will find you the best product out that'll suit your circumstances. So we're working for you, trying to find you the best possible deal out there. And yeah, especially at the moment, a lot of not very straightforward stuff out there. Everyone's got different circumstances, and we will find, like Curtis said, the lender that would fit your circumstances. And again, like Curtis said, we work, to your timings within reason. Whereas with the banks, it's making an appointment, 9 to 5, can't get an answer out of them. We try to get back to you, if not that day, the next day, with some answers. So that's I would say is the reason you come to us.
Mitesh, what would you say?
I was just thinking, looking at the four of us, we've got over 40, 50 years experience in the industry combined.
Yeah.
You have to sort of take that into consideration when you get an inquiry. And if you think about the types of inquiries that we get, they're never straightforward. There'll be simple things like 2 sources of income. And there are certain lenders that have so strict criteria. And you need a lot of time to do that research with the lender. And the beauty of working with a broker, and also the fact that we have access to very good BDMs, the business development managers of the lenders, where just by sending an email with some information, we can get some agreements in place. We've got access to some niche lenders, some small building societies, where just by sending an email with attachments of documents, we could get an agreement for the deal done. You can't get that level of service when you go directly to a lender. You'd have to go through a set process. Everything's very set in stone, and there's no shortcuts. And so when you use a broker, there's that certainty to know in the background that the broker is going to do their research to ensure that he's covering all those unforeseen obstacles that might come in the way at the outset. And so that I don't have to then worry post application that the underwriters decided not to, lend me the amount of money I want, because obviously I haven't done my research properly. So as a client, I wouldn't know that much because I'm not experienced in this area. And so you're basically relying on the broker to do all that hard work on your behalf. And that's the reason why I would say you won't use a broker. It's the time-saving element. Time is so precious these days, and I can't really stress enough, because I've come from a banking world, so I can tell you that it takes a long time to get the appointment in the bank. Then you need both parties in the bank together. Even these days, I know the video calls being made, but it is a set process that laid out. There are no shortcuts, and they have to follow a script in terms of how things have to be done. There is a set sales process that has to be followed, and so there are certain things that have to be done. And if you think about it, what would you do as a client? You pick a bank, and then you decide based on the rates that's the bank I want to go with. Now, you haven't dealt with a bank before, and you're dealing with them for the first time. So you're then restricted to that one particular lender and their way of working and their underwriting, which will be, tailored to that bank. Whereas you could get the same rate or even a cheaper rate, or deal with a cashback, and it works on the same deal. And a broker sort of could have a choice of 3 or 4 of the lenders that's providing you the same deal, but in half the time.
Yeah. One thing I will like to add here is, like as a broker, we take control, I think, of the whole process. So we deal with the solicitor, with the, with the estate agent, with the client. So we do know what is going on. So we do take care of the whole underwriting process, and even once the book is approved, still it is not completed.
Yeah.
We are on the case, and we ensure that it is done on a timely manner.
That's amazing.
Yeah. Just to add on to that quickly, with all the stamp duty deadline that we've just passed, we were last week, we're pretty much on the phone to estate agents, solicitors, banks. We were just forever, hours and hours on the phone trying to get stuff sorted, trying to get over the line. Whereas had you gone to a bank, you'd never get the broker in the bank to run around for you and chase you, because they'd be busy doing other stuff. So
that's right.
That's where we give that extra personal touch, where we made sure we got involved right till the last minute, made sure the funds were released in time for everyone to get the property in time. So
yeah, no, good points. And you guys just covered off so many points. I was going to say this, but then someone else said this, and so on and so on. But all I would add to my 2 pence is, first of all, try to get an appointment with your bank first. That's going to take you about a week or 2. Okay. then they're only going to give you one set of product range, whereas we're going to give you the entire market range, right? So with so many lenders in the space. And the third thing is, Curtis said, we're your partner in this. We're not going to live with you in your properties, but what we're going to do is we're going to live with you and get you those keys right until the keys are in your hand. So for us, it's our job. It's what we love to do. It's not just a job for us, to be honest with you. We actually enjoy what we do. And as I said, quite close to the beginning of the call was, we take passion in what we do. For us, it's having that smile at the end of the day. And we send congratulation cards to our clients, birthday cards, and we look forward to those. We post them, every week to our clients to say thank you for using us, trusting us, sending them birthday cards. And it's that relationship business, and for us, it's all about relationships. So if you haven't used a broker, or you're considering it, are they worth it? Are they not? You know what? Pick up the phone to us. I've left our contact numbers on the screens here. And make a note of it. Take a screenshot. Do whatever you've got to do. Pick up the phone to any of us. Give us a call. Talk us through your situation, your current circumstances, and we'll do our best to support you in your journey. That's for sure. If anybody has any questions, please do put them in the comments box. We've got one question here from Thoughtful Sunny. His question is, if you have a shop with uppers, is it better to split the title into resi and commercial to maximize the financing in terms of rates? Thanks. Mitesh, what would you say?
It's a tricky one. You'd have to look at the overall cost involved as well for splitting the title.
Mm-hmm.
So get the quotes from solicitors and have a look at that. I would say that depending on what the commercial unit is, you can pick up an attractive buy-to-let product based on the flat above. So again, like what I think Curtis said earlier, when you have an option, when you're looking at a buy-to-let product in a personal limited company name, it is one of those where compare the quotes. If it's just one semi-commercial unit, as in the semi-commercial unit under one title, then compare the quote with the lender in terms of what they're offering against two separate quotes, one for a commercial and one for the buy-to-let, and then see in terms of what you think. Ultimately, that's what we're here for, is providing the options.
Yeah, and what I'd add to that is, what's the goal? What's the strategy? Do you want to split the titles to maximize on the loan to value on each unit? Do you want to split the titles because you're potentially looking to sell off one of the units in the short term? So these are the questions that we're going to have with you. And as Mitesh did rightly say, it costs money to separate titles, creating leases, and so on. So first thing you need to ask yourself, have you got any intentions on selling off any of the units? If you have, then yes, you need to split the titles from the outset. I would definitely suggest so when you acquire it, because you're already conducting the legalities with the conveyancer. You might as well start that process and have the lease set up. Then, with regards to mortgages and rates and loan to value, what I would say is, yes, if you separate the titles, you are more likely to get a higher valuation, because the bank's then valuing, or surveyors then valuing it on an independent basis rather than a collective unit. So first and foremost, if you've got separate leases, so let's assume that you've got a flat with a retail unit below on separate titles, that means there's two mortgages, there's two sets of rates, two sets of applications, two sets of valuations. But prior to that, if you're purchasing that property on one single title, it's what they call a semi-commercial mortgage. It's a mixed-use property, mixed-use mortgage. With regards to loan to values, I'll put it on the screen there. Up to 75% is quite typical for a semi-commercial. And likewise, even if you're splitting the titles, if you've got a flat above a residential, some lenders will do up to 85% loan to value. But again, it's very choosy on what type of commercial is downstairs. Is it a cafe? Is it a grocery store? Is it a nightclub? That sort of stuff. There's lots of questions around that piece. So we can have that conversation going forward, not a problem. So loan to value, as I said, typically up to 75%, depending on location. Is it a primary high street? Is it secondary? And so on. In terms of rates, it can be as high as 6%. If we're going to the challenger banks out there, you're looking at rates typically between 5 and 6%. But the beauty is those lenders are going to offer you those 75% loan to values. Whereas typically, if you go to your traditional bank on the high street, those that are still in that space and lending on commercial properties, they're probably going to be around 50, 55%. But then the other thing is they're going to want you to have experience. For those of you that are trying to transition from residential buy-to-let portfolios into commercial, I understand the attraction, especially around permitted development and what you can do to those properties. But take a step back to understand, what do you want to do to that commercial? Are you looking at reducing the footprint, producing or developing an apartment behind it, above it, and so on? So again, you've got to look at what you're allowed to do with and without planning permission via permitted development. Speak to a planning consultant to understand what you can do, likewise with an architect as well that's worked in those areas. And what I would say is, when you're engaging with a planning consultant, first of all, ask them, have they done numerous applications like what you're intending to do? And two, have they served people in that local town that they're doing it in? Because planning consulting is all about law, it's all about the legalities and what's worked, what hasn't worked in that particular area. So make sure you're engaging with the right planning consultant. The other thing I wanted to add was around, what was I going to say about the valuations? The valuation can be very tricky. Buy-to-let valuation on the resi side is typically open market value, because every residential property can virtually be rented out immediately. There's going to be a bit of a void period, but it's not going to be, on the other hand, it's going to be like commercial, I would say, that it's going to take, it could take 1 month, it could take 6 years to get occupied. Now, commercial, as we may know or may not know, is going through a huge transition at the moment. A lot of retail on high streets are moving online for obvious reasons or not so obvious reasons. So they're going through a transition. So you've got to understand, if you're buying a commercial unit, is your intention to keep it as a commercial unit? Okay, if it is, then great. But then tomorrow, who's going to be your tenant? Is it going to be Costa Coffee? Is it going to be a Ladbrokes, for example? Is it going to be a McDonald's, and so on and so on? So, have these questions in mind at the forefront and engage with the relevant parties on day one before you acquire that property or even buy it in cash. We've got a lot of clients that buy property in cash, whether it's commercial or residential, but they haven't thought the process beyond purchase. And I always say to our clients, and we all do, I'm talking on behalf of the whole team here, is we always ask them, what's the intention? And I keep drumming about this. We want to know what the end goal is so we can work back with you. Because the last thing we want to do is set us all up to fail. So it's key we understand what the key drivers are, what the goals look like, and what you can do or can't do in commercial property. I hope that answers your question.
I was just gonna add, Khil, that if it's own occupation, then you can pick up cheaper rates under 5% for commercial. So it really depends on the end goal, as you say. So if you, let's say, decide to buy a pub and you're going to run the pub, then you may be able to find a slightly lower rate for the commercial side, because it's a non-occupied commercial mortgage compared to an investment mortgage.
Yeah,
that's great.
Perfect. Another question we've come in. Can you tell us more about the other services you offer over and above mortgages? You know what? We always talk about mortgages, and we need to be doing a bit more. And we say this as a business, that there's a lot more out there than just mortgages. We do offer, and Dipesh has put the service banner up there, and that's all mortgages. But we do more than just mortgages. We do life cover, which is very, very important. When you're taking out a mortgage, which is usually your largest direct debit on your monthly bank statement, you need to ensure that you've got relevant cover in place. Have you got mortgage protection? Do you have life cover in place? Do you have critical insurance in place for your loved ones? We're creating portfolios of properties, but have we got relevant insurance and cover in place to foresee the debt? Because tomorrow on our passing, the debt doesn't die with us. It'll either get repaid to the bank, and then the equity then remains with the family or the beneficiaries of the person's estate. So it's key that for people that are looking for just mortgages, and we always ask our clients about wills, life covers, even buildings and contents insurance. And what we like to pride ourselves is a one-stop shop for everything related to property, mortgages, and finance, as well as protection and cover as well, because it is inherited. Dipesh, do you want to add anything there?
Yeah, no, I think you're right. Insurance is, so you've got your life insurance, your income protection, your buy-to-let, landlord's insurance. So it's important to have all those things, like you said, to cover. So yeah, we do that, and we always ask our clients if they've got the relevant cover. We can also refer you for our business partners to do will writing. If we can do that for you as well. So we can do. We are pretty much a one-stop shop. We can do mortgages, insurances, protection, and to refer you for your bills as well.
That's good. Okay, we have another question from Javed, Khalid Javed.
Yeah.
Can a director approach a lender direct, or should they go through a broker?
Again, that's one of those questions that we asked about, why should I use a broker or should I use a mortgage broker? And, we've all said it, why would you not use a mortgage broker in today's world? As I said, complex property types, complex incomes, potentially adverse credit on profiles. It might be a missed payment, an accidental missed payment, a default only a month ago, missed mortgage payments. We've got the know-how and the experience, along with knowing what lenders to approach in certain circumstances, in various circumstances. So you're more than welcome to go direct to banks. But what I would say is they're only going to give you one option. That's their own option. Whereas we've got no tie-ins with any certain lenders. Our job is to matchmake. We call ourselves the Cilla Black or blind date. I don't know if you guys I feel that old. But what we want to do is, matchmake the applicants to the lender. And ideally, if we can get it the cheapest possible, then great. If not, you may need to suck it up and get the slightly higher rate for a 2-year fixed once your credit profile improves. And then when it comes to the refinancing, we can look for a more competitive lender. But we can work with you. These calls and these lives are more about, they're not advice. So please don't take anything about advice from it. It's just putting out information for you to think about and contemplate that there are various options out there, and then you've got the likes of us that you can contact.
Kurti, I was just going to add something because I had a real live example about this. So I had a client, a very high net worth client, that wanted a very small amount of mortgage compared to the income he was earning, and we wanted to do a straightforward remortgage on his residential property. So we were going to go to a high street lender, and he said to me, I'm going to use another broker. Should we come to you? I'm not sure. Can you check this out? I'll come to you. That's fine. The other guys are taking long. And I said to him, you know what? I have my doubts because I know this particular lender. They're very fussy on certain things. And so one of the things I didn't like is that he had one buy-to-let in the background, which was in joint names with his wife. Now, what was happening is that all the rental income was going into the wife's account. So I approached the lender and said, is this a problem? And they said, it could be a problem. Let me come back to you. Within the hour, I got a phone call back from the business development manager and said, I'm really sorry, I've tried my best. It's gone all the way high up. We understand it's a very straightforward case. There's a high value case for a straightforward remortgage, and they declined it. I haven't done anything yet. I just basically sent an email out and a phone call within the hour. The client was so impressed, he gave me the buy-to-let business as well. Because he said, look, we would have never known about this because you had this gut instinct about asking the question. We managed to find out. Otherwise, who would know? How would you know that that's going to be a problem? Think about it logically. You wouldn't.
No, that's right. And, as mortgage brokers, if a client mentions that they've got a default, a missed payment, or they haven't looked at their credit report for many years, the first thing we always say to our clients, please download your credit report from, let's all say it in one go, www.checkmyfile.com. There you go. So listen, this is not pre-planned. This is straight off the cuff, but we're it's in our blood. What we want to do is help our clients, and the best way of doing that is the likes of downloading your credit report, understanding what a credit report derives of, what are the key factors. Is the credit that's on your credit file belong to you? Is it your brothers? Is it your sisters? Is it your twins? Is it fraud? These are the things that we need to eradicate on day one, because the last thing you want to do is put in a mortgage application, have a hard credit score footprint, and then get a decline for a reason that you didn't know anything about. So it's key for anybody out there that's looking to join or buy a property, unsure about their credit profile, or are aware of any of missed payments in the past, typically up to 3 years. Checkmyfile.com. I think there is a small fee for it, but it's well worth it to do so. So I'll definitely recommend it. Any other questions on your ends, guys, on your social media files?
No.
No? Okay, good. We've got another question here. Do you do standard owner-occupier residential mortgages? So, who should we pick on today? Go on, Curti. Do we do owner-occupied mortgages?
Yeah, definitely. So it's I would say it's a normal standard. Most of the lender are happy to do that.
Yeah.
So if the property is owner occupied and there is no issue, I think we can get the best rate for you and the best lender. So definitely, yeah, there will be other factors. We will be looking at affordability for you, your income and all, what sort of loan to value you are looking for. But yeah, to answer to your question, yes, we can do the owner occupier.
Perfect.
I'll dangle the carrot there a bit and say for unoccupied mortgages with the right level of income and the right credit profile with less debts in the background, you could pick up anything up to 6 times your income as your lending amount. So can't give away too much right now, but I'm just saying that we have access to those sort of lenders that would be happy to just provide you 6 times what you're earning.
Yeah.
Perfect. And we get these questions every time, right? Dipesh, I'll come to you in one sec. With regards to loan to values, owner occupied up to 95% now. So you don't need to be a first-time buyer. You can be a home mover. You can be a second-time buyer up to 95%. As Mitesh just said, up to 6 times income. It's amazing. Not everyone gets 6 times, but it's up to. So it gives you some sort of boundary. Everyone asks, can I get 5 times? Can I get 6 times? Sometimes you can only get 4 times. It depends on the level of debt in the background. It depends on your credit scoring and numerous other factors as well. Dipesh, you want to chip in or anything there?
No, I think you just covered it. I was going to say. So, yeah, no, I think that it's always loads of criteria in the background as to whys and hows. So, get in touch with us and we can go through them with you.
Yeah.
Perfect. So, ladies and gents, we're going to wrap it up here. We've been on for about 47 minutes of your time, so thank you so much for joining us. As I said, we will be doing more and more of these videos each month. But do please subscribe to our YouTube channel, and please follow us on all our individual Facebook accounts and the company page as well, which is our mortgage broker. As I've said, there's our lovely names and numbers on the screen. Please take a screenshot. Contact any of us for any further information about services such as mortgages, life cover, buildings and content, or even if you're looking to buy property next year, get in touch with us now, engage with us. We'll tell you what you need to start thinking about, the types of documents we're going to need, and the process going forward. So we'd love to have that 10, 15-minute conversation with you to understand more about your plans. For those of you that have got mortgages coming up, expiring, I should say, in 2021, now's a good time to look at your property portfolio. Now's a good time to look at your mortgages to understand when the mortgage deals are coming up, because if you do not refinance or remortgage in a good time, you will end up on the standard variable rate, which usually is higher than your current mortgage rate, which means you've got a bigger debit coming out of your account the following month. And the last thing you want to do is pay more out when you don't need to. So if you've got any mortgages coming up for renewal in 2021, whether it's your main residence, whether it's a buy-to-let, please do contact us. We'd love to support you, provide you with an indicative quote, and to understand more about your portfolio and your property goals. And we'll do our best to serve you better. As I said, if there's any other further questions, feel free to pop them in an email to us or call us, or you can also post your questions and comments on our social media pages, and we'll do our best to answer them in the best manner forward. Dipesh, I want to say thank you to you for hosting and answering the questions and providing your information. Thank you so much. Curti, thank you for joining us, and likewise providing your knowledge and insight. Thank you again. Mitesh, on the governor's chair there. Thank you so much. Thank you so much.
Thanks, Akil, for putting the hard time and getting this organized.
Yeah, thanks, Akil.
Okay.
Thank you, and that's our pleasure. So, for us, as I said, it's not a job for us; it's our passion. It's what we enjoy doing. And yesterday and all the completions that we've had over the last few months, the thank yous, the gifts, the cards, the messages, it's a nice feel for all of us. So we look forward to working with all of you that are watching. For those of you that are watching this on a replay, as I've said, do contact us back via social media, email, or telephone, and we'll do our best to support you. So I'll leave it there.
Okay, can I just add something? That question about what else do we do? So I was going to say, well, if you need a recommendation for an accountant, a conveyancing solicitor, a planning consultant, an architect, we've got access to quite a lot of these professionals at the moment. So we're writers, so it's been quite a journey where we've also established those relationships along the way since we've launched the business.
And that's such a nice way to end the call, because Mitesh is certainly right. If you haven't got the right power team around you, and this is more focused on the portfolio landlords, you need to buddy up, with the right power team. And as Mitesh said, it's a property tax accountant, it's the right planning consultant, it's the right architect, it's the right lawyer in certain circumstances. If you want to visit our website, which is ourmortgagebroker.co.uk, we've got our strong power team within that team that can provide you with the relevant advice. And we trust them, we like them, and they've got the relevant experience. We've done business with them. So they're all qualified in their own right. They're all experienced, and they know their field very well. So feel free to mention our names if you do want to contact them directly. The information is on our website. You can pull it from there, or again, you can contact us and we can put you in direct contact with them as well. So, Mitesh, thank you for adding that in, and it's very, very important to have that right power team. So, thank you so much. I'll say thank you again and goodbye, and join us sometime in July for our next video. Thanks again, guys.
Thank you.
Bye-bye.
Bye.
Bye. Bye.